let's spell Vestavele with our wasts. Please, come on. Come on. Pardon, let's spell it. Uh, W, where's the W? I can't say W. Uh, I'm trying, my guy. E, where's the E? Where's the E? Let's, the I. Someone said we spell the I. In and out. Let's have a seat. Let's have a seat. Welcome to the fifth edition of the Youth Series, the last of the year, so we're coming to the end of this year. I'm your host, Arnold Quizera. Thank you for making the time to be with us this evening. It's quite chilly, it's quite hard. People make commitments, people change commitments. Basically, we can't work in the winter, going by the number of people that signed up and the ones that have shown up. But at the end of the day, we're here for a purpose, and that purpose is to fulfill or start the journey towards certain things. Now, before I give you context for that, we're going to have an array of things happening. We're going to have a panel discussion, great lineup of panelists that are here. They're going to help us break down so many things to deal with understanding things regarding our economy. As a continent, we are 62 years old from our first political liberation, the first country. Who can guess the first country that ever got independence in Africa? Did you say? No, you're not allowed. You're PS, you're not allowed to say these things. Some the front row. First country to get independence on the continent. Your drinks are on me. What year? You, my guy, you can't get it halfway. 1962. So Ghana in 1962. Now, after that, we've gotten political liberation. Economic liberation has been hard. We're not integrated as a continent. We talk about East African community, then tomorrow we close borders. We talk about, ECOWAS, then all the money is kept in France. So there are a few things here and there. But in order for us to achieve economic liberation as a continent, we need to work together. And that's why AFCFTA comes into play, the African Free Continental Trade Area Agreement. What is that? I'm not the expert. There are people that are going to answer those questions here today, a little bit later on. But before they do that, allow me to introduce our host. Let's put our hands together for Sarah Rukundo, the country manager for Vestavele, to help us break this down. Sarah. You want my microphone? I don't share it.
Hello? Okay, perfect. I'm going to keep it brief. I believe you all are anticipating the great conversation that's going to take place. Yes, so welcome to the Vestavele Startup House Kigali. For those of you who are joining us for the first time, I see a lot of familiar faces, which is great. That means we are an ecosystem that supports one another. So thank you for coming. So I'm not here to give the opening remarks, just to be specific. I'm just here to welcome you. So having been a part of the past 4 events myself, I was really moved by the great conversations, the great lineup that we had, and the institutions that we visited, starting from universities where the concept of entrepreneurship is kind of at its genesis point. So thank you so much to Nguriza Nshore for organizing these great events. Thank you to the Ministry of Trade for organizing such an amazing discussion. I was moved by the panelists, I was moved by the young people themselves. And to close off the year, we're here at one of our flagship hubs as well to discuss directly with the entrepreneurs with the most anticipated conversations on regulations and incentives for businesses. Thank you everyone for coming. So I'm not going to go into details to say what we do, but I'm going to talk about one opportunity. Since we are discussing opportunities available for entrepreneurs, we have an opportunity for entrepreneurs to join our next cohort of our entrepreneurship program. It's a program that supports early stage and growth stage initiatives that are through capacity building, through training, corporate linkages, private sector linkages, investment linkages. So please, our call for application is on our social media platforms. So please, if you know, tell a friend to tell a friend. That's the common cash phrase. So please, please, please share the opportunity. I know that there is someone out there that needs this opportunity, and I'm looking forward for more applicants tonight. Sorry. So without further ado, I would like to hand the mic back to Arnold and let him introduce our very important guests. And once again, welcome to you all, and thank you to all the other entrepreneur support organizations that really made this day a possibility. Thank you.
Thank you, sir. Thank you, sir. Another hand clap for Sarah. Just a reminder, she's providing free drinks after this, so please. Without any further ado, let me introduce the gentleman to give us our opening remarks, the Permanent Secretary for the Ministry of Trade, Mr. Richard Nuenshuti.
Thank you so much. I'll use minimum time. Apologies, my voice is a bit husky, and it gets worse with the weather. Salah, MD West Wheeler, Robin, Ngurizanshole, colleagues that are joining this discussion. There are some environments that you go to and you feel very useful. This is one of them. I'm actually very impressed by the design and the concept that the facility, the hub, is providing. For some of you who have been back in the BCC, remember that concept of incubation that was started by KIST back in, I would say 2005. There was a time when the idea of coming up with incubators to support academics that are coming out, and if you compare that and the current concepts hubs we have, you definitely cannot even go beyond that and say we have opportunities. I think it's a whole idea of how the youth today, you have all the opportunities, it's a matter of making the best choices out of them. So from the Ministry of Trade and Industry, and definitely one of the policy institutions that facilitate entrepreneurship, along with other ministries, Rwanda Development Board, Ministry of ICT that has a mandate to undertake related projects. We are very much interested and willing and supportive of such ecosystems where we can share what is out there for our youth to tap into. And I think one of the idea of putting up the youth series was really to have that exchange of information. What is there? What can you take advantage of? And what should you be doing in terms of whatever the industry that you're playing in? So very much appreciate Ngurizanshole that has come with us along the way. We have had so far 5 series. This is the 5th one. We partnered with different academic institutions, and we had different areas of discussions. Whenever I talk with an entrepreneur, there will always be questions around access to finance, access to markets, support on capacity building. So all these areas of concern, they coin our interest for discussion. And that's why the series have been really very much along those lines. But I definitely know that there are other areas of interest that have now come out, some of which includes what are the opportunities in the CFTA, the African Free Continental Trade that we are talking about today and we are driving. The African Continental Free Trade opens up a wider market for all of us. But the question is, what does that mean for an entrepreneur? What is actually there? Because it's not, it is driven by the political will of our leaders, but it has to be put into practice by entrepreneurs, private sector. And they're the only people who can really realize these opportunities. For the government, public sector, is just to lay the environment, just to make sure that everything is negotiated. We have good terms for you. Is it about customs? Is it about procedures when you're crossing borders? All that is negotiated, but the ultimate objective is not that. The ultimate objective is that companies can expand the horizon, tap into opportunities across other markets. So that is the CFTA, and we'll be having discussions around that. But then we also talk about, when we come back to subjects around made in Rwanda, made in Africa, made in East Africa. When you talk about made in Rwanda, some people, I think there's been a growing trend of thinking, is it about change of clothes, change of design? There is a broader spectrum around what made in Rwanda means. It means really companies looking at tapping into the internal markets. How do we make our own products, consume them? The surpluses have to get to the market across. And we have so much potential for that. So Made in Rwanda policy gears towards putting up incentives that can create, remove barriers to entry for industries, for companies, for startups. With those incentives, you're able to at least tap into those opportunities, but with the intent that as consumers, we can also consume our own. Of course, not stopping what we import, because we do not have everything, but of course, looking at what can we produce as alternatives at times. I think this has also, was done back in 2015, but interestingly, during COVID period, you realize that countries started banning their own exports. Why? Because there was a time when travels were limited, cargoes were limited, and so countries started doing bans on commodities, products, commodities, agro-commodities. And the question was, if you don't have the made in, then you're not going to survive. So it's really no longer a policy to drive, it's actually becoming a necessity. And that's why all economies or all countries have looked into realizing their potentials internally. And for us, and when I say for us as young entrepreneurs, we see it as an opportunity. We see where to come up with. The third aspect that was also captured across different discussions was tech-enabled enterprises. Today we are talking about e-commerce. We want to support companies to go online. We want to trade beyond, not only in Rwanda, but beyond Rwanda, to different other markets. And we believe there is a possibility not only for us to buy from Amazon, to buy from eBay, but also to sell to them, or to sell to the nearest markets. And so tech-enabled enterprises or startups or solutions that do not only look at platforms. Yes, you can have a platform, but do you have the best payment solutions? That triggers the fintech solutions. Do we have the right payment systems? Do we have an integrated payment system? Are the policies in place facilitating players along the fintech solutions producers? And this is an area, if you look at the percentage, many of our youth are very much knowledgeable about. A couple of months ago, we had a competition with UNCDF, and we were looking at talents around fintech solution developers. And we got enormous solutions. We managed only to award around, I think, 5, with around 15,000 each US dollars. But there was enormous ideas and concepts. And so this is an area also we have seen a growth trend, but we also see opportunities. So as we think about this, the free continental trade area, we need also to link it with trade facilitation tools, and e-commerce comes in the play. Of course, we are at different levels in different countries. Some countries are a bit advanced in terms of the Internet of Things or how they use internet, but this is where we are going. So if Rwanda, we get an opportunity to move faster, there is a chance that we can also take advantage of the CFTA. The third part that we also need to look at is our industrial development. Again, yes, technology, yes, brilliant concepts that need to be supported, but we're also looking at industrial development. So we know that there are a number of our youth who are not in IT, but they could be having good ideas that solve problems in the industrial sector, in agricultural sector. It can even be around just resolving an issue around fertilizers. You know, today you had a crisis during, it was only when Russia started fighting with Ukraine that most of us realized that we get part of the fertilizers from that side of the world. It was only during that crisis that we realized that even the wheat that we have, part of it comes from that part of the world. The same to other countries. So the question is, who are there to find solutions to some of these issues that we have? It can only be our youth. It can only be our young people. It can only be you who have those ideas. And so in these discussions, I'm very certain that we will share the opportunities. We will see what government is providing. This information is definitely available. But the question is that, are we taking advantage of them? Can we even do more? Where can we improve? What can we do more? So Made in Rwanda is yes, the policy is there. CFTA, yes, the doors are open. But can you help us to realize what was intended by our leadership? So not to take much of the time, I really want to appreciate your participation. I hope we can have healthy discussions around this, specific to your practical issues, specific to the projects that you guys differently have. But I definitely think we can do much of these sessions with different hubs, with different institutions that we work with, MINICT, RDB, intended to really make sure that the information that is out there is shared with you. So thank you so much for inviting us, and definitely very much appreciate West Willa for hosting us and giving us the time to meet the useful innovators, but also Ngurizanshore for journeying with us in the last 5 sessions that we have had. Murakoze, asante sana.
Thank you, Piers. Thank you, thank you, thank you. Before we go to our panel, just another question. The Piers has talked about a few things, a cocktail of things. Not the fresh juice cocktail, I prefer the one somewhere there. Yeah. How much in funding have African startups raised in the first 3 quarters of this year? Anyone have a figure close? How much? Actually, in our presence here, we have 2 people that have raised about $200,000 between the 2 of them just this year. And those are people who are going to inspire them. One is a member of Vesta Valley. He's sitting somewhere around here. How much have we raised? A crate of beer on me. That's it, guys. Okay, so startups on the continent have raised about $5 billion this year. The number has tripled from last year. What does that tell us? As in Europe, as in Asia, people are not willing to fund startups as much. The money is coming to Africa right now. How are we positioning ourselves for that money? From agri-tech to health tech to fintech. It's a cocktail of things. And that's what we're going to have as a conversation today, a cocktail of things, from cybersecurity to fintech. And without any further ado, ladies and gentlemen, allow me to introduce our panel of experts who are going to help us break down the needs of our industry and the needs for us, the opportunities for the young people. I'll start with Ms. Diane Omutoni. She's the AFCFTA implementation officer at the Ministry of Trade, also known as Minicom. Dan? Anywhere you're comfortable? There? I would also like to introduce Ghislaine Kaiji. She's the Chief Cybersecurity Standards Officer for the National Cybersecurity Authority. One of the people I was talking about who has raised, some good money, so please go to him, tap him, he should pay for your drinks. Allow me to introduce Mr. Steve Shema. He's the founder and CEO of Exus. Guys, getting BNR licenses isn't easy. BNR licenses aren't easy. But this gentleman got a BNR license, and he's going to tell us how he did that. So allow me to introduce Mr. Felix Kundimana, the CEO and co-founder of Jali Finance. Then the people that provide those licenses and make them hard for everyone. I'm going to ask her lots of questions. I'm going to be my best friend for the next 2 minutes. Mrs. Ingrid Chuzizo from the National Bank of Rwanda. She's the Managing Director for the Financial Sector Development and Innovation Division. Ingrid. And I'll selfishly ask the questions. Thank you for making the time. I want to start with you, Diane. And I want you to lay the ground for us, to get us crawling for a bit. In regards to opportunities, the PS talked about opportunities and untapped opportunities from blocks, external markets, such as ESC, AFCFTA, ECOWAS, and the likes. What kind of opportunities are there for Rwandan entrepreneurs?
Thank you, Arnold. Thank you for having me. I'm glad to be here. So, PS talked about a lot of the AFCFTA opportunities, and I'll also, supplement on what he said. So the AFCFTA is a unique opportunity for Africa to drive into creating more opportunities for the AFCFTA. And here, the AFCFTA in general, when we talk about the AFCFTA, what we have to understand mostly it's tariff reduction and also market open opportunities for the youth. The entrepreneurs benefit directly by accessing the market through a reduced tariff. And also, here Felix was asking about do we export services? And I was like, yes, of course. It's not only about exporting goods under the AFCFTA, but services also is open. What is open for the entrepreneurs mostly is to get access to their market and being treated as they treat nationals. So the ministry, what we do is to mostly for the entrepreneurs so that they can get access to other markets within the ESC, within the AFCFTA, and also have the opportunity to be treated as their nationals and locals. So in addition to that, the AFCFTA also offer the opportunities to entrepreneurs to get to import raw materials at a reduced cost, and also the semi-processed goods, which help them produce efficiently and also diversify in their range of products that we have. And as consumers, we get to benefit as well, because we have the opportunity to get diversified goods. So in summary, the AFCFTA offers so many opportunities for the youth. Just to mention a few, there's tariff liberalization and elimination, also non-tariff elimination, where we can export our goods freely without facing any non-tariff barriers, and also export our services, being able to establish there commercially. The free movement of people, we can move there freely and provide our services. So there's a lot there's a lot to tap in for the youth. So I hope, we'll get more into it maybe further.
Yeah, we're going to dive into it, and we're going to come back to you. You're promoting open borders. The National Cybersecurity's latest law doesn't seem to be promoting open borders. It seems to interlock a few things. So, Gilay, the National Cybersecurity Authority has been in place for not a very long time, and it's coming up with policies regarding people like Shema have to abide by. What is its role, and how can it ensure that as founders who are trying to go for the African market to tap into the AFCFTA, they're not locked out of that market because of the regulation coming out of the body?
Thank you, Arnold. We're also promoting open border business. The National Cybersecurity Authority started 2 years ago, and its main mission is to build skills and capabilities necessary to protect Rwanda's cyberspace. And with that, we work with different institutions, be it in the private sector, in the public sector, law enforcement agencies, and member of the society, to make sure that we ensure the national ICT security, but we also develop cybersecurity guidelines, policies, standards, that ensure that all electronic operations are done in a secure way. But also, one other thing that is key for us is to raise awareness about cybersecurity and the risk associated with the cyber threat landscape to the Rwandan society, because you may have the strongest network, you may have the strongest or secure website or application, but we find that usually the majority of threats are successful because of the weakest link being the human factor. So we are putting much effort into raising awareness to end users, if I may say, different audience. So another thing is the law that you've just mentioned. Last year, in October 2021, there is a law that was passed by the government. It's not NTS's law, it's a Rwandan law. And the law is about the protection of personal data and privacy. So when I say on your comment that this law is also promoting open border business or even the mission of AFCFTA, is that as the startups or as the companies provide or transfer their goods or their services outside Rwanda or within the continent, it will involve exchange of data, of personal data between across Rwanda or outside Rwanda. And this law comes in to make sure that that exchange of data or that processing of personal data will be done in a fair and transparent way. One of the key principles of this law is that now every company or every institution or every individual that collects personal data from individuals, they have to get consent from the owner of that personal data, which in the law is called a data subject. They have to get consent from them before they collect and use that data for different purposes that they have informed the data subject or the person that is giving them their personal data for a specific purpose. Maybe as we go along the discussion, we'll discuss more about this, but the law comes in to give more control of your data, your personal data, so that the institutions you give the data to will use it for the purpose that they have told you. So the key thing that we have to know is that now the data subject has to give consent for their data to be used.
Thank you, Gile. Shema, I want to bring you into the conversation. And as a fintech player, the data protection law is not one thing that you have loved hearing, especially when you're trying to raise funds outside the market. But before that, Exus. What is Exus?
Thanks for having me. Exus is a fintech. What we're doing, we have an app that digitizes informal saving schemes. They're locally known as Ibimina. So we digitize them, we give them microloans, we also look into microinsurance. So pretty much that's what I do. Now back to the cyber security or the data law. For us, it was something that was expected. If you've been obviously following what's been happening, because I think the wave started from Europe with the GDPR data law, and that hit lots of companies, mostly big tech companies. So in any case, when it came into play, it's something we had already expected. So it didn't really disrupt a lot of whatever it is we're doing. And also, given the fact that we deal with people's money, we work with banks. Most of them, they require secure, network connectivity. So all of that was already there in place. So for us, it wasn't really, I wouldn't say it was a disruption as far as what we're doing is concerned. And pretty much anyone who's doing something around this sector, whether you want it or not, it's a matter of when. It's not a matter of if. Because it's happening. It's a wave. It started from Europe, the West. It's now coming into Africa, and I believe lots of countries will be adapting. So it's now up to the startups to really adapt and then make sure that whatever it is that they're building, the technology they're building, sort of complies with all of that. Because at the end of the day, you have to operate within a country, and that country has got regulations and laws. So you've got to make sure that you sort of comply with those. Yeah.
I just feel like She pinched your back there.
Oh no, she didn't. She didn't.
Shema, I want to give you a figure, right? 67%. And why 67%? 67% of fintechs
Yeah.
in Rwanda are inclined towards one particular service. Is it because of the laws from, BNR, Minicom, National Cybersecurity? Do you think the law has anything to do with the innovation?
Well, I'd say yes and no. Yes, in the sense that, I'm an entrepreneur, and I always, before pointing fingers to others, I like to first look at myself. And one key mistake most entrepreneurs we make is not doing our homework properly. So you wake up, you've got this crazy idea. It sounds really good. So, you've got to do your homework, really. If it's a country, if it's a sector, please make sure you understand whatever it is, who's fighting with who and what's going on. Now, on the other side, I've been dealing with mostly the central bank for quite some time now. And if you just step outside of Rwanda and then go in other African country, you would really have to appreciate what's happening here. Yeah, there's still things they need to improve, obviously, as everybody has. But at the end of the day, you realize that they, at least the ones that I've been dealing with, they are very much open-minded, but at the same time being mindful of their mandate. Because they can't just open up everything, at the end of the day. But for me, the experience that I've had personally is they've been really listening, and it always helps when you make the first step as an entrepreneur. But if you wait for them to come to you, that's not a good sign. But when you go to them first, then that's way better than having them come to you. So yeah, I'd say that's been part of my experience so far with the regulators. Yeah.
He's coming to you for another license, definitely. It's bringing someone with a license into the conversation. Ingrid, going to come to you. Let me first go Jali Finance. Felix, she gave you a license, Ingrid, and it takes some time to get that kind of certification. If you could take us through that journey, because many people don't know about it, and it kind of limits their innovation. Shema talked about, the need to go to them before they come to you, the need for you to do your homework. What was your journey like, and what is Jali Finance?
Thank you so much. Probably I start with the letter. Jali Finance is a licensed financial institution whose mission is more of promoting impactful consumption. And by that, we mean mostly made in Africa and environmental friendly product and job-creating asset. So that's it in a nutshell. But going through the journey licensing, it's been quite long, I would say. Quite long in a sense, well, that's relative because someone, the central bank can give examples of people who got that, for whom it took so long compared to what took us. But when probably you need something so much, you feel like a minute is the whole year. And what happened is at some point you find yourself even, your investors are on your neck saying, we need this paper. Otherwise, forget about us, forget about our money. And yeah, so, but this gives it even more sense and the good feeling when you get it. But again, make you question about your fellow startup and or fast smaller companies, because it can take way too much of capacity of staff in terms of money and everything, which can be really, really, really challenging for small companies. I understand and salute the fact that the central bank is coming up with a lot of a lot of types of licenses. It's not like we used to have banks and insurances. Today, you have licenses that don't even don't even request for capital requirement, minimum capital requirement. You are there, you have some paper legally registered and everything, and you get your license. Still, there's a lot of things to put together, but of course, like ours, it's not that sort of that type that doesn't require the capital requirement. We had to keep more than 200,000 in our account, more than $200,000 in our account for the whole year. Banks were calling us, you guys, you don't need to take this money, or is it an asset whose owner left, we give it to people in charge of that. So yeah, that money, keeping that money for the whole year, it was not easy for us, and I can understand the pain for companies of whose size is lower than us. So yeah, I think that's it. But again, a lot have been done, as I was saying, and the central bank is still putting in efforts. When you are done with that, there's a lot of reporting that comes with. There's a lot of mistakes that that entrepreneurs can possibly do, which again, depending on the categories, at some point you can feel that the central bank is a policeman who's there to severely punish people. I say deliberately, severely, because you can punish people, but not. But yeah, I'm not saying that you are going to make a lot of mistakes, but I'm not neither saying that we are not going to make mistakes. And so are other smaller companies, smaller fintech, for example. But in general, it's the feeling after having it. You see that it has been worth it.
For context's sake, $200,000 is about 201 million rand and francs. So small 201 million rand and francs. Ingrid, 201 million rand and francs is what he needed to get the license minimum capital requirement. I repeat, 201 million rand and francs. What's the process, and how can we ease in that process of getting licenses? And he talked about their licenses that may not need capital requirements. Does BNR have a regulated, or I would say a dedicated framework for getting particular licenses?
Use this one. Thank you, Arnold. First of all, before I dive into the question, I'd like to appreciate the conversation and the diversity of the panel. Personally, I'm also learning a lot, and it's something to commend. So first of all, before I dive into the particularity of licenses, I would want to really mention that regulators are there for many reasons. First of all, it's to protect the market and the ecosystem. Let me give an example of Steve and Save, a business that I understand quite well. He's dealing with saving groups, Ibimina. If you look at the composition of saving groups, you see that it's mainly groups of people that are vulnerable. Vulnerable in the sense that the financial means are not that high, but they've managed to put themselves together to achieve something bigger than what they would achieve individually. There's also quite a big composition of youth and women, which we also consider vulnerable in the sense that the financial services providers have not been particularly keen to educate and to provide financial services to them. So what that also means is that anything that could happen to destabilize that kind of group would have even a bigger and more disastrous effect to their personal financial management, but also to the economy at large, because they come together in big numbers. So this is to kind of give sense to the work of a regulator. We are there for those people. We are there to protect them. But we are also there for the entrepreneurs, because we are establishing standards. We heard a number of arguments that talk about attracting funding. And one of the key things that make an investor interested in your business is because I'm coming from Europe or from America. I don't necessarily trust Arnold, but I trust the fact that he works in an ecosystem that is regulated, and the regulations that he's abiding to come from something I understand, come from a market that I understand, comes from guidelines that I have already worked with as an investor. So it's really protecting and giving credibility to the ecosystem to also help you achieve your mandate as a business. So licenses in themselves, going now to the mandate of the National Bank of Rwanda. The National Bank of Rwanda regulates financial services. And by financial services, I will list them. We don't regulate the entirety of financial services. We have two regulators in that market for that sake. So there's the Capital Market Authority that regulates everything capital market related, and there's the National Bank of Rwanda that regulates banking activities, insurance, pension schemes, payments, and then microfinances, plus other businesses, because the financial sector keeps growing, and technology allows us to explore other verticals that we had not explored before. So that's basically the scope of the National Bank of Rwanda. And for each activity, there is a license pertaining to it. So you want to operate banking activities, which is basically intermediating funds, taking the surplus to those who need it. You have a banking license. You're doing an insurance business, you have an insurance license, and so on and so forth. And the question that we get mostly from fintech is, where do I fit? You're regulating banking, you're regulating insurance, you're regulating payments. As a fintech, where do I fit? And it's a valid question. But the approach that was adopted by the International Body of Central Bankers was that you could there are two approaches that are complementary, and that's what the Central Bank of Rwanda has adopted. You regulate services. Yes, you're a fintech, but there is a financial service that you're providing. So what is the underlying financial service that you're providing? Are you, at the core of your product, are you a payment system provider? Then you'll be regulated under the payment system provider. At the core of your activity, are you doing insurance? Then you're regulated by the insurance law. And what we do is to make sure that our regulation respectively give room for financial technology to come in. But also we understand that if we are stuck in those verticals, we might miss out on something. So that's why we brought the non-deposit taking financial institution license, which is a license that initially came in to cater for lenders, but that don't collect deposits, as of the case of Save. So that license came in initially to cater for that, but it has been expanded to take care of other financial services that are coming in the market. But that's not all. We have also gone a step ahead and made it more flexible, and we brought in a regulatory sandbox. So basically, a regulatory sandbox is also a regulation, but what that allows you to do is that if you don't fit in anywhere else, or if you see where you fit, but there are specific challenges, you come to us, we give you room to test, refine, and then be licensed. I think I was very long in my answer, but the point I wanted to make is the role of a regulator, the mandate of the National Bank of Rwanda, and how you can pursue licensing.
She broke it down quite well. Just a reminder that to those using any of the social media platforms, the hashtag is Youth Series XWCH. And we are talking about the Youth Series. Engage.network.grow. Those are the themes for this year. I want to stick with you, Ingrid. And it's regarding startups preparing for licenses, the process. What is that process and how can startups prepare for those licenses?
Well, thank you. The question actually makes me think about something I thought about when PS was giving the opening remarks, and incubation is very key. Incubation is very key because startups don't just need licenses. They need funding. They need legal services. They need, you could have an idea, but you're not going to do it all. You're not going to do your own finances. You're not going to do your own legal work. You're not going to do everything. So incubation is very key, because also one of the role of licensing is for the regulator to see that you are a solid company that is going to come in and be compliant with the requirements, but also stay in the market enough to serve the people, long enough to serve the people. So incubation is very key. My first advice to entrepreneurs, startups would be find an incubation place that is going to provide you with the assistance you need, that is going to help you refine. And I would also mention that the National Bank of Rwanda is ready to work hand in hand with all the incubations that exist in the market. Come in, explain the regulatory landscape, help you personally understand what is required as an entrepreneur for you to pursue licensing. So that's the first thing. And then the next thing is, basically, as Steve said, your homework. Understand the market. If you're not part of a bigger incubation ecosystem, at least on your own, you can come to the central bank. We are ready to explain. We have now a financial sector development and inclusion department. And within the department, we have a fintech office. It's still very small. It's a one-man's office, but it's going to grow as you come to us. And the office is ready to help you walk the journey.
Thank you, Ingrid. Just a reminder to prepare your questions. We'll open up for questions maybe after the next round of questions. Diane, I want to bring you back into the conversation. And there are two things here in regards to preparedness and competitiveness of Rwandan startups by tapping into AFCFTA. 90% of the funding for startups goes in about 4 markets: Kenya, Egypt, South Africa, and Nigeria. So that means Rwandan companies, in a way, are not yet ready to tap into AFCFTA. The first trade of AFCFTA was Rwandan coffee to Ghana, which is more or less a traditional export. How can we prepare Rwandan companies made in Rwandan products to be competitive enough for the AFCFTA?
Thank you, Arnold. There's a lot of things to do in order to prepare our private sector and the entrepreneurs in general so that they can tap into the markets and also have the opportunities that other countries have. For instance, the very important thing that the government does to ensure that the entrepreneurs and the private sector get access and are competitive enough to access the African market in general and the ESC, so is to negotiate market access and also tariff liberalization. So the private sector don't negotiate for us, we negotiate on their behalf so that they can get the market access and have their product and services exported. So in addition to that, what we do together, Minicom together with RDB, is to ensure that we conduct different trade fairs so that we can, the entrepreneurs, the private sector can have the opportunity to market themselves, what they do to make a brand which is continentally known. And also there are different forums, business-to-business forums, which are undertaken by Minicom together with RDB. But also, since we are talking about ICT-related things, RDB and Minicom supports entrepreneurs to onboard their products and services on key e-commerce platforms like Alibaba, Dubai.com, so that the African continental can get to know what we have in Rwanda and what we are offering to the rest of Africa. Another thing that is important that the government does is also capacity building for our entrepreneurs, mostly on e-commerce, so that they can understand the available opportunities around e-commerce. So if you have a product, you don't need to move physically in another country. You can get your products sold without moving. So it's another aspect that the government is working on, so that our entrepreneurs and the private sector in general can get to understand the opportunities offered by e-commerce and have the opportunity to sell products all over the continents. There's a lot of things that has to be done, but just to mention a few, these are the things that you're doing at the ministry.
Not letting you off the hook, coming back to you a little bit later on.
Yes.
And talking about the hook, Gile, that data law, coming back to it, there are key considerations that entrepreneurs should be able to consider, especially you talked about when they're operating with personal data. Fintech's e-commerce platforms are largely what we're dealing with within our startup ecosystem. What are those key considerations that they need to take into account to abide by that law?
Thank you. So there are a couple of things that the law requires businesses or what they call data controllers or data processors. One of it is that there are specific principles that they have to ensure that they comply with, to ensure that they have lawful and transparent exchange or transfer of data. So some of the basics that I may cite is that one, for a data controller, a data processor, anyone who collects and processes personal data has to first register with the supervisor authority, which is the NCSA in this case, to register to be allowed to lawfully collect and process personal data in Rwanda or for people who are in Rwanda, not necessarily Rwandans, but for people who are in Rwanda. And some of the things that those companies or those people or individuals that collect personal data have to provide when they're registering is, one, they have to clarify what type of personal data they're going to collect. And another thing is the purpose for which they're collecting that personal data. So that as the NCSA, through the Data Protection Office, goes back and checks, did you ask for my name and my address, but then you asked me for, let's say,
Visa card.
my medical records, I don't know, but your business has to do with delivery of goods. So we have to check, and you have to determine the purpose for which you're collecting that data, and it has to match the specific data that you're going to collect from people. Another thing that you have to provide, or you have to think of as you are complying with the law, is that the law encourages or recommends for data to be stored in Rwanda. Meaning the personal data that you deal with as you provide the services that your business provides, meaning talking about fintechs specifically that we are talking about today, that data has to be stored in Rwanda. But if you find it easier for you or more favorable for you and your business to store your data outside of Rwanda, you have to, as you're registering, you have to request for that, for the authorization to store data outside of Rwanda. The next key thing is that if even when it comes to transferring data outside the boundaries or the border of Rwanda, you have to still request for authorizations to do that. And that means when for processing personal data, you include other third parties that are not in Rwanda, then you have to specify who they are and where they are. And one other requirement is that for institutions that decide to or wish to store or transfer data outside of Rwanda, you have to provide also a contract that you do with those, for us we call them third parties because we are not directly talking to them. You have to show the contracts that you made with them that clarifies the responsibilities of you, the one who is registering or wants to process personal data, and the third party who will process personal data on your behalf, so that in case of any issue like data breach, or in case that third party starts now sharing that data without your knowledge, we have something to hold them accountable from. Another thing, I think I talked about it at the beginning, is that from this law was passed in 2021, I think we said it, but it gives a transition period of 2 years that will end in October 2023 for businesses that were already in operation when the law came out, so that it helps them to comply with this law. And one of the key things is that come October 2023, every data that will be collected will have to be collected when the user or the owner of the data has given consent. So you have to, the business or the data controller or data processor has to provide a way of getting that consent from the data subject. And the consent that the data subject or the data owner provides, it has to be, you have to specify to that person what's data, like whatever information you're also giving us, you also give it to the data, to the person who's giving you their consent, is that you have to tell them explicitly or in clear terms why you are collecting that set of personal data from them, why, for what purpose you're going to collect that, you're going to process that personal data for, and you also have to tell them in case you're going to share it with other groups of companies or third parties, you have to inform them, and they have to give consent to things that they understand, because we've seen that the habit is that even for those who used to have something that looks like forms where the person gives consent, they are usually like complicated terms that someone may not easily understand, but this law requires that institutions will have to make clear explanation of what the person is giving consent to, so that in case, because this law also gives the right to the data subject, the right to object to their personal data being processed, and other rights, but that's an example. So they have to object, or they have to give consent to something they understand, and they will be able to hold you accountable too. So those are some of the things that that businesses can start to think of as they think of complying to this law.
Things to think of, Steve. A lot of food for thought for you there, and some of it very challenging. But outside that, outside access to finance, what are the other challenges that businesses or startups within your sector are facing?
There are too many.
Top three.
One, access to capital. That's as far as if you've been doing business in Rwanda or outside of those 4 countries you mentioned, it's not easy. It's really tough. It's tough to get access to capital. You have access to talent. That's also another issue because you're working on a solution that has to be scaled up, be it vertically or horizontally, depends on how you're growing. Now, the third one, which I believe has been part of the conversation, which I hope these free trade agreement will come to solve, because I, for one, you talk to investors, partners, Rwanda is too small. Too small. It's a market, it's too small. So then you come back to this whole, free trade agreement, and also how do you create partnerships, so that you, while you're operating from Rwanda, you're looking at a wider market, not just Rwanda. So I think those are the three I would say. There are obviously many. We talked about regulations, all that kind of stuff, but then those, I say, at the top of my list, access to capital, access to talent, and then also access to market, if I could put it that way. So that are the three top challenges I'd say startups or entrepreneurs are grappling with as far as, business growth is concerned, yeah.
Felix, staying with challenges, consumer finance, you have your own challenges. Clearly, BNR certification is not one of them, but what are your challenges as well? Top three.
Yeah, thank you. I think there are challenges that are in common because talking about consumer finance, unless you are so big or really established, these are stuff learned by entrepreneurs at the end of the day. So things like access to capital is something in common. Adding to what my brother said is actually it's so hard everywhere, even the US, I would say, but not at the same level. I will call it, I have some background in mathematics. I'll call it like coefficients of complexity. If, for example, you are in Silicon Valley, that's looked at as the model of somewhere in the world you can get established and raise money. So if we take this as a model, I'll give it like 1.001. So it's like 1 to not make it 0, but if you need 1 million, it's going to be as hard as 1 million it should be. Probably it's going to be like as hard as getting 1 million and $1. For example, it's 1 times 1, 0.1001. Yeah, it's going to be like the normal effort you can do to get 1 million, but just add like 1,000. But as you go to London, as you go to Tel Aviv, as you go, as you go down level, the coefficient get higher and higher. Once you enter Africa, it's now worse. And at least if you think of those big four, as they call it, Nigeria, etc., the coefficient is going to be like, we are reaching like 5. So, but in countries like Rwanda, I will not say that Rwanda is on the very bottom. It's somewhere beyond some other countries in Africa. But this coefficient, I will put it like on 10. So if you need 1 million, you're going to make efforts like someone who's raising 10 million. Now the coefficient has been 10. So you are going to outwork someone who's in Silicon Valley 10 times. So access to capital is so hard everywhere, but probably not on the same level. Now, when it comes to trying to get licensed, it's actually get even more complicated because, yeah, you cannot say, oh, please, I've been trying to raise money, I've been trying to get the money, but I failed. They say, oh, what are you doing here? But with the salute and respect to what the central bank has been doing, there's some category for everyone. I would say that's really a challenge. And again, because we look at what we do, I'm going to another challenge. When we look at what to do as consumer finance, we look. You remember I've mentioned like environmental friendly product. I've made pointed out made in Africa. But when you come to consumer finance, because consumer finance is where you take something, it's not like we are not financing money, we are not giving money. We are giving you right to take something on credit. You need this water? Yeah, take it, pay later. Take it, this is the financing, this sort of, that's actually the consumer finance. Now, the other challenge is who should do this finance? Because after all, it should be directed to an impact. Who should be doing this finance? We've seen companies doing their own financing for their own product. We've seen companies selling car, for example, and they have some financing scheme. We've seen companies that finance manufacturers who finance their own supply chain. Like you, my wholesaler, you can come take goods, go sell to your retailer, and when you get paid, they pay you. Or they finance up to the retailer, or some up to the consumers. Now, who should be doing this? Because most of the companies are doing this to promote their own product. But does it make sense for the bank to tap in? So now that's a challenge where you see companies taking too much of the burden to do everything under one roof, and they get stuck somewhere, cannot move, cannot grow, because just they are keeping too much receivable on their balance sheet, and they can't really grow. And now the other challenge is the impact on the economy in general, because the consumer finance, you need to add on something. You mark up your interest. Now you can say that the inflation or the prices in Rwanda has been increased by 10% simply because there is a consumer financier who came and put this 10 as the markup. So it has a say on the economy and inflation in general. And lastly, on the taxes, because some people might even boycott the licensing, or just come to be licensed because just following the fiscal incentives, saying that when probably you are regulated, they waive the VAT. For example, in our case, they waive the VAT. We could not really grow the way we needed to grow without that licensing. So at some point, coming to who was supposed to do it. If I know companies who try to do this at their own, but then because they are not licensed, they were not financial institution, they had that burden of taxes. You have to pay VAT on this value added. This need to be part of your income, need to be part of your income tax. Remember, for example, you are, as we do accounting in Rwanda, it's accrue. That means for whatever income you are expecting to get, whether you got it or not, as soon as you raise an invoice, that's an income. You pay a tax on it. So that the tax can be also a big of a burden, but yeah, those are things companies have been sitting and trying to build their process, their ways out in a way or another, and I guess some are overcoming those challenges on a different scale. Thank you.
Quick maths there, he gave us coefficiency. Simple English, the higher you go, the cooler it becomes. I want to bring Ingrid back into the conversation. We're talking about challenges here. And from a regulator's perspective, what are some of the challenges that you have observed in the sector from BNR side of things?
I think as a regulator, there is a level of standard and readiness that is required for someone to be regulated and supervised. And I would say that that readiness is made of all of these challenges. It's your ability to raise funds, it's your ability to manage your business. It's all of this put together that makes you a business that is ready to be now, first of all, to scale in the entire market, but also to scale while you are regulated. So I would not now talk about challenges other than what they said, because it's when now you come for regulation or licensing that we notice that you don't have enough capital to back a business such as consumer lending, or you don't have the proper governance for you to manage a business such as collecting deposits from people. So the challenges that we see in businesses are no different from what they're facing. It just makes it a little bit more difficult for us to regulate if the business readiness is not there, which is why I think the government, the development partners come together to now create a fair transition for you to I would say, to cook that readiness until now you're ready to scale. So it's not just challenges, but let's also acknowledge that there are mechanisms to help entrepreneurs transition that process, get ready, build the muscle that they need in terms of governance, in terms of financial capacity, all of that, until they are really a business ready to scale up.
Looking at the glasses half full. Ready? Anyone with a question? If no one has a question, I'm going to be very selfish and I'll continue asking these questions. Anyone with a question? We're still shy? Anyone want some coffee? I'm going to look at the glasses half full now. Enough of the challenges. So let's talk about opportunities. And in this perspective around success stories, Made in Rwanda success stories. The first AFCFTA trade is a Made in Rwanda success story. Made in Rwanda has been around since 2017, correct me if I'm wrong. How has it grown and how has that contributed to Rwanda's economic growth?
Thank you, Ronald. Talking about Made in Rwanda success, since it's launched in 2017. So Made in Rwanda in general, I hope.
We can hear you. We can hear you.
So Made in Rwanda has contributed to the overall GDP growth in Rwanda. So that's the very first thing to mention. And also Made in Rwanda program contributes to addressing the trade deficit that we always face. We still have the trade deficit, but Made in Rwanda contributes by reducing the trade deficit in the sense of we are now importing less and exporting more. We still have the deficit, but yes, we are getting there. So this is one of the major things that the Made in Rwanda has contributed to the overall economy and also to the overall economy, yes. Additionally, the Made in Rwanda also, one of its success is the mindset change, because people now get to understand the importance of consuming our locally produced goods and also the impact it has on our country and on local producers in general. So there's a number of success stories behind Made in Rwanda. Just to mention a few is the mindset change and also the impact it has done on the products that are locally produced. Now we have quality products and compared in the past, and also we have durable products. So if we compare the the products that were produced 10 years later and compared to the products that we have now, you can see the difference in quality and in quantity as well. So Made in Rwanda has a lot to offer to the country in general, but these are the key successes of Made in Rwanda program.
Thank you, Diane. Elaine, looking at the positives here as well in regards to the data protection law and how it helps the growth of these particular industries. 5 years from now, could we look back and say we actually took 7 steps forward, and what could those 7 steps forward be?
Thank you. With the coming or the passing of this law, looking 5 years from now, I think we're looking into a more secure ecosystem, if I may say that, because it will give more trust. It will provide more trust in the digital services that will be benefiting from. For example, if I give you one indicator that global rankings usually consider when it comes to security or the cybersecurity or the use of ICT is the trust that people have in online services. So, and it hasn't been a good one in the past, and we feel that with this law it will give or instill more trust in the solutions that my fellow panelists here will be developing, but even other entrepreneurs present today. But also, in 5 years, one of the things is that we are looking into not only Rwanda, but there are plans that also we may encourage other African countries as well to have regulations in place to ensure personal data protection. Because, for example, we have the Malabo Convention or the African Convention on Cybersecurity and Data Protection. Not all African countries have ratified to that, which means there's still more efforts into convincing other African countries to ratify that, but also put more efforts into protecting personal data and privacy of users. And we think that hopefully in the next 5 years that the African ecosystem will have more efforts put into ensuring a safe and secure digital space. And with that also, we hope that it will also help us also to comply with the rest of the regulations that are out there outside Africa, because you mentioned the GDPR, but GDPR is just for the European Union member states, but even the other countries are also coming up with their own privacy laws and data protection laws. And we feel that as for other foreign companies come to establish their businesses here, they will have more assurance, because they will, this law has been requested for a long time, and we think that as more institutions, data controllers, data processors start complying to this law, it will provide a more secure ecosystem to operate in.
Thank you, Gile. Steve, opportunities. We talked about challenges, opportunities. Using SAVE as an example, you digitized Ibibina, microloans later, microinsurance now. What's next?
Growth. I think that's just it. That's just the way to go. From my perspective, definitely you've got to benefit from the free trade agreement and then grow, expand into other countries, because we definitely have to grow. That's the only option. And also, back to some of the conversation we're having here is, for me, I mean, sometimes when I say it, people think I'm siding with the regulator or public sector. But man, I mean, just go outside of Rwanda, you just appreciate what we have here. And that's why I'm always, pointing to my fellow entrepreneurs. The fact that they're very, open and listening, everything comes back to us to really make good use of that, and then do your homework again. After you've done your homework, now go for it, and try to engage them before. And once you've done that, because there are lots of things you can do here, you can't do in some of the other countries on the African continent. So if you have it here, at least that gives you that, validation that you can use, again, to raise capital, you can use to attract talent. So in any case, you'd find that there's solutions, mixed with, challenges. That's why we do what we do, pretty much to address those challenges. So there are plenty of opportunities in Rwanda, again, to try things that maybe haven't been tried elsewhere. And then as you do that, think of, a larger kind of, space in terms of countries, geographies. Don't just get stuck in Rwanda. Take, benefit of this whole, free trade area that's been, given to us. And yeah, I think there are plenty of opportunities, really. So it's just a matter of us entrepreneurs, picking those up and then running with them. Challenges are always going to be there. If they're not there, then everybody would be an entrepreneur tomorrow. But the fact that it's not the case, then that's the reason. But it also presents opportunities, obviously, yeah.
Thank you, Shema. Felix, failure is one thing we don't like to talk about. This side of the world, we don't like to talk about how things are hard. What are the learnings for you that you could share with us that have led to the growth of Jali Finance?
Thank you. There's a famous saying that people say, here failure is not an option. We're not accepting something lesser than this. But when it comes to reality, that's what people live with. We fail a lot. The only reason we still heads up is the comparison between our failures and our successes. Otherwise, you won't see people posting on social media that, oh, I failed. We post good stuff, and I encourage that way, to keep that way forward. But one of the learning that I can share is people, entrepreneurs, should master and learn to master what they do. When you enter a market like any market, and you say you are bringing on a financial institution, say someone can ask you, but what are you bringing that Bank of Kigali can't bring? Whatever answer you can come up with, however correct or wrong you might be, no one is likely to believe you on day one. You need to work so hard to prove yourself right. One of the things, the secret sauce that I'm not trying to take credit for, it has been there for long, I've learned from many other people, is that we need to learn and master what we do. There are entrepreneurs in this house trying to build apps to do a lot of things. There's a lot of things that you're not discovering something new. You are not, what you do is like, I'm proposing this process to be done this way. You see, like, when Uber came, we have a lot of Uber sort of apps here. When Uber came, what did they do? They have done a process. Say, if you need to take a cab, this is what you do. this a new process. We are proposing you. We are not saying this is the best of ways, because after Uber, we've had a lot of other innovations. But this is what we are proposing that people should do. Or people say, oh, this is the easy way of doing things, the new process of doing things. Let's forget a bit about the apps. This is a good example because I know this house, Vesavel, and we work together for some other thing. I respect them for so much. It's a good example here. But there's other things. Let's take an example of McDonald's. What does McDonald's really do?
Real estate?
They do real estate.
Real estate.
So, and to do that, they say it's like, okay, I can show you, well, behind the scene, actually, I'm making money out of real estate, but I'm creating a new use of a house. This new use of a house, it's like a small kitchen and a restaurant. Now, McDonald's now, last time, there's no McDonald's in Kigali. Last time I was in Egypt, and in many other countries I traveled to, they have McDonald's. Now they have an app, but in the very beginning, it was not meant to be used in an app. What was McDonald's selling? In this house? The use of this kitchen and the small restaurant. It's another process of doing things. They mastered it, so that you cannot say that the burger of McDonald's is the best in the world. But one thing is for sure: the McDonald's that you will take in South Africa is the very same you are going to take in London. Your mother can do a better burger, flip-flop, doing these things. But what McDonald's, okay, however good of a cook you are, at 1 minute and 44 seconds, you need to flip this burger and place to reduce oil, for example. That's a new process of doing things. So what I'm sharing, that a big learning is people should master their craft. They should learn and put a process together. Put a process together that can do things. So that's why coming to consumer finance, coming to financial institutions, that's why I say, today, for example, next year itself, we are going to be to have a total asset of 4 million. Okay, if I would have said that on day one, I say, how can you? Again, what are you doing that Bank of Kigali could never do? But when you master things, you come up and say, okay, I'm doing, for example, I'm doing, this is what can be done on the lease to own of motorcycles. This process, and you master it, at the end of the day, you end up and say, I don't even need a collateral that much. Yeah? Because a typical bank, they say, okay, you have a project, bring a collateral, and we give you the money. But when you master it, you will see other people merging, like selling like an air ticket, for example, on credit. They have their own ways of mastering the process, mastering their craft, and say, so briefly, we need entrepreneurs, we need to learn and master our craft, know what we do. Thank you.
Master your craft. Just for the record, McDonald's yearly books show they make 90% of their money from the buildings they occupy. So 90% of their money. They mastered their craft with the burgers, and that's where they have the influence from, and then later they sell you the building space where they set up their restaurants. Ingrid, in your closing remarks, the opportunities that you see for entrepreneurs from your side of the table. We could use
Right, so the opportunities are really many, and I'll strictly speak from a regulator's standpoint. Today, regulators particularly in Rwanda, but also across the globe, understand the value in entrepreneurship, see value in novelties, in new things. And I can assure you that the National Bank of Rwanda is working to accommodate the newness, the entrepreneurship, the newness that the entrepreneurship is bringing on board. And we are not doing it just because it's a mandate or because we want to do it, but it's because we see the value that it brings, as I mentioned, and it's because we see that we have some challenges that have existed for very long that can only be solved. I mean, you can do the same thing and expect a different result. We see challenges that we've had for a very long time being resolved by new products enabled by technology or else. We see entrepreneurs bringing to us solutions that can help us achieve the level of inclusivity we want in the market. We see products that help other financial sector players comply better with regulations. We see new products that help us cope with issues of cost of financial services in Rwanda. So we see that and we value that, and that's why we continue to refine our regulations. That's why we continue to provide spaces where people can come and test and what was the term again? Master their crafts until they're ready to scale up and ready to be regulated. So there's a lot coming in, and I would encourage everyone to learn about those and see how you can put it at better use.
Ingrid Chuzo, she is the Managing Director for the Financial Sector Development and Innovation Division at the Central Bank, also known as BNR. A hand clap for her. Thank you, Ingrid. Ghislaine Kaigi from the National Cybersecurity Authority. She's the Chief Cybersecurity Standards Officer. A hand clap. Diane Umutoni, she is the AFCFTA Implementing Officer at Minicom. A hand clap for Diane. Steve Shema, founder and CEO of Exos and the man with a lot of money at the moment. And another man with a lot of money, Felix Nkundimana, CEO and co-founder of Jali Finance. Allow me to thank this panel of experts that has broken this down for us, and allow you to go back to your seats. So a lot of things to contemplate on in that regards. I want you to allow me to introduce Mr. Robin Padbag, the chief of party at Nguriza Nshore. My Kinyarwanda is not the best, but I'm trying. The chief of party at Nguriza Nshore for the closing remarks. Robin.
Thank you. Listen, before I start and make any announcements on our side or any nice words, I don't think anybody does this in events, but please, a round for our moderator. Arnold did a great job. And,
thank you.
So I'd be remiss, again, everybody's here today because of an opportunity to share. And before we proceed, I'd really like to appreciate the information that was shared to us, with us by all of the panelists. It makes all of the difference for everybody, especially the young entrepreneurs that are sitting here, that are trying to figure out, okay, well, how do I get from A to Z, but without actually having to deal with all of those obstacles in between. And by having people like this and opportunities like this, we get a chance to share information. So thank you very much to the panelists. I know, as Arnold well said, that I'm standing between you and the refreshments that our dear friend and host, Westerwelle, is going to be offering us. But I did want to say thank you to both of our partners, Westerwelle and Minicom, in this venture that we did. I think that PS mentioned it very well in his opening remarks.
This is the fifth in our youth series. And I don't think that we could have imagined the success that we were going to have as we were sitting around a table and trying to figure out how do we engage the youth, how do we engage the private sector, how do we engage the public sector in an active discussion that can actually talk about different things that are going on that really make a difference in everybody's lives. And trying to figure out how do we promote what everybody here was talking about. How do we actually break down barriers and allow people to become more competitive? How do we reinforce the role of Made in Rwanda and what we can do here ourselves? And how do we actually take that knowledge that we have and make it available to others? So thank you very much for everybody for the time and patience. I know it's a rainy day today, and I appreciate everybody's attendance. Nguriza Nshore is a 100% USAID funded project. Our sole mandate is to really facilitate the access to finance for Rwandan entrepreneurs, primarily SMEs in the agribusiness market system. We would not be able to do that together. That is something that we do without shame, in the sense that we say, we're not the experts. Let us bring the experts and tell us about what they know. So thank you again to all of those experts that came and shared that information with us today. I'd like to again thank the moderator for his activities in promoting this discussion and making sure that it was an interesting one. And without further ado, I hand it back to Arnold just to close it out for us.
Thank you, Robin. Hand clap for Robin. A hand clap to USAID for bringing this together. The Ministry of Trade and Industry, a hand clap for them. And our hosts, Vestovele, for ensuring that firstborns do their job and there's no rain for this. I'll leave you with potentially food for thought, right? So Africa missed the first, second, and third industrial revolutions. The fourth industrial revolution is here. What role can we play? What role can you play to ensure that we leapfrog into the fourth industrial revolution? Ladies and gentlemen, allow me to allow you to go and have some tea on the house, brought to you by Sarah Rukundo. So the whole bill is on her. Thank you for this good evening.